So today we are going to go through some examples of some tapes and walk through the headings of these tapes that you receive and get an understanding for what the information on these tapes is. So we're going to, part of this, have a three-part series. One is walking through this tape. Second will be through a second tape. And the third is walk through the spreadsheet where we provide you with definitions, so you have them to go back through if there's something that you can't recall what it means. So we'll provide you with a little dictionary as well. So on this first tape, we are looking at, starting in the upper left, the servicer loan number. And the servicer loan number is really just the number that the servicer gives for its tracking purposes that then is put on the invoices to the borrower. As the lender, you should also be tracking by this number or this information as well. So you can easily search the servicer portal based on either the address or this phone number. And typically each servicer has different sets of numbers. For example, this servicer starts with, it looks like 584. Another servicer I know uses 002. Another one starts off with, I think, 700. So really different numbers, but it's really just their sequential numbering system internally. Sometimes the tape will show the servicer itself, so who is servicing the loan. So that's good to understand and good to know, because if you're looking to go acquire the loan, will you keep it at that existing servicer or will you move it to a different? Next on this tape is the due date. Now, this is the due date of the next payment. And we'll talk later about columns that you may see elsewhere on tapes. But just for now, we're just going to walk through this tape. So the due date, you can see on the top, it's 9/4/2019. So that is the next payment due. We're recording this video in early 2024. So this, top loan is over 4 years delinquent. PI constant. This might be shown in kind of different terminology. PI is principal and interest. So you might just see it as P and I, or it might be principal and interest. PI constant is another term. This is the payment, the amount of the payment that goes towards the principal and interest. And PI constant is taxes and insurance. So this is the portion of how much of the payment goes towards the taxes and insurance. And if you add that P&I constant with the T&I constant, that will show total payments. So in this first one, now their total payment is 408.68. This next one is 592.71 when you add them. So usually when it's zero, it means the loan is not on escrow. So they are not collecting for taxes and insurance. Little note nugget there. If they're not collecting on taxes and insurance, probably the taxes are not being paid by the borrower, and the insurance would be under a lender-placed policy, especially on payment history cutoff date. This is great information. Usually don't see it very often. And what this is this is when the servicer pulled the information through. And this one, it's through 11/30/23. So if you saw this tape come out in February, the information might be different because it's several months old. Deferred balance. Deferred balance is the amount of money that is being deferred, meaning it's not being charged interest on it and is due at a period of time, which is a balloon date. So that's important to understand. Usually the deferred balance comes into play when there was some type of modification. UPB, also the unpaid principal balance. This is the amount that they owe on the loan that's accruing interest. So Very, very important to understand, of course, the UPB when you're bidding. And performing loans or not performing loans, of course, it's very, very important. And this is one of the major factors of what you bid off of. Corporate advances. Corporate advances are payments made by the lender, potentially for things like legal, taxes, insurance, might be considered corporate advances. It's the amount that has been advanced on behalf of the lender. Escrow balance. Positive escrow balance means that there is money in escrow to cover taxes or insurance. Negative escrow balance means that the lender has advanced some of those funds for taxes or insurance, and that's why it's negative. Some servicers will move the negative escrow balance into corporate advance. Some will leave it as negative escrow. We'll go through when we're bidding all of that strategy. My main focus on this video is to walk through really, high level information of what is on these tapes. Accrued interest is the amount of interest that's accrued since the next due date. So the next due date on this top loan is from 9/4/2019. So since that date, there's been almost $11,000 of interest accrued. And why is the corporate advance escrow balance accrued interest important? Because that will give you what is that estimated legal balance, that's the total payoff on the loan, which on non-performing loans is typically not the unpaid balance. On performing loans, you will see it more in line or very close to that unpaid balance. So in this instance, if you took the unpaid balance, added a deferred balance, the corporate advances, the accrued interest, and if the escrow is negative, that would get added, or if it's positive, be subtracted, gives you that total legal balance. Might also be called total payoff. Next column, last payment date. You can see there's some of these have payments made. If this is blank, that typically means that there have been no payments made since the loan was sent over to this servicer. As you can see, last payment bucket kind of answers that question, which has been no payments. Now, you usually will not see this last payment bucket on a tape. This one is a little unique, where they do have it on there. Interest rate is, of course, the interest rate on the loan that is being charged against the unpaid principal balance. Modification flag is a yes, no, whether there has been a modification on this loan. If there's a yes, then typically there is a column for modification date, which is when was that modification? A little note nugget. Be careful when you see modification flags with a recent modification date, because that will note the loan is current. But just because the loan is current, is it really performing? Now, if they only took $1,000 from a borrower who was $10,000 behind to bring the loan current, does that constitute a performing loan? I will let you be the judge of it. For me, I would say no. Lien type. This is typically the position of the lien. Is it in first? Is it in second? Original term. This is the original term of the loan when it was originated. Typically, you see these as 180 or 360 because they're 15 or 30-year loans. When you see 189, 182, when some of these random dates, a lot of times those were not originated by a traditional lender. It was originated maybe by a seller financing or some other type of deal. But that's what the original term is. And remaining term, usually do not see remaining term on there, but it should be a calculation of how many months till the loan matures. Negative means that it has already matured. But in this instance, a little weird, because here, if the maturity is 2019 and it says 3, something isn't adding up. But that's why usually remaining term kind of just ignore, but that's what it should mean. Current maturity date and original maturity date. These two go hand in hand. Current maturity date means the maturity date as of today. In many instances, you can see these are all the same from the original, but sometimes you may have a modification that extends that maturity date. So that is important to understand that you're putting this in any type of model or calculator, that you're forecasting it off of the current maturity date, not the original. BK flag. BK flag is the loan in bankruptcy. Some will also show whether it's chapter 7, chapter 13, as we go through this. It might show the foreclosure or bankruptcy case number. So, but it's a flag to know which ones might be in some type of bankruptcy. Same with foreclosure flag. We'll flag out whether there is a type of foreclosure. And then sometimes you will see foreclosure start date. Other times you won't. One of the things I just want to, again, really reiterate is every lender, every servicer will provide tapes with information. And we'll go through the most critical information. The more information, the better. But in many instances, a lot of what is shown on one may not be shown on the other. So like I said, foreclosure start date is when that started. And then foreclosure status, they say whether it's active foreclosure. Again, active bankruptcy is usually a borrower will file bankruptcy once they are pushed into foreclosure. Now we're getting into some other information, such as borrower first and last name, which is important to understand when you're doing due diligence. So if you look up a property to see who the owner is on it, and if John Doe is on the tape, but Tim Smith is the one who is listed online. Okay, what happened? Do they still own it? Was it sold at tax sale? Was it a subject to deal? What kind of happened in that, which is part of the entire due diligence process. Loan origination date, original loan amount. Good to have this information. For example, we do not like to acquire loans that originated during COVID because we believe prices are inflated during that time. We prefer loans that originated in the past or significant in the past because they would have the appreciation on that property. So knowing when that loan was originated and that original loan amount is good information to have as part of how you might be selecting or dwindling down the asset you look at, especially if there's 200 or 2,000 assets on a tape. That original P&I payment is good information also to have, but it's information that we will see, but it doesn't come into considerable play when we're looking at putting in a model. First payment date, again, goes back to all the original loan criteria to understand when that first payment date is. It's typically slightly after that origination date. You see property address, which is the address of the property secured by the loan. And you have the city, state, zip, county. County is important to have because you can quickly go to the county records maybe and check online yourself for taxes or call to get tax updates. Sometimes you may include what's called the APN number, which is their parcel number, which also gives you additional information on the for tax purposes. Some tapes will also show mailing address, and where that can be a benefit is if the property address is different from the mailing address, then it might not be owner occupied. It could be a rental, could be through a divorce. So kind of, again, will lead to painting that picture during that due diligence phase, which then can also answer a question of current occupancy. Again, great information to have on very large tapes because if it's vacant, some people prefer vacant properties. Some people do not like vacant properties. What is your preference? So that's information that's on there. Just because it's on there, just remember, people, doesn't mean it's accurate. Always do your own due diligence. BK case number. This is great information to have along with the BK filing type, which is the bankruptcy. Strongly recommend people get an account at Pacer, but if again, the name is a very common name, there could be 5,000 people with that name who file bankruptcy. Having that case number can get you specific to that individual case. Then bankruptcy status, open, dismissed, discharged. We will do a whole course on different types of bankruptcies, what all this means, but having that information on the tape when it's in bankruptcy. It's additional information, again, that is good to have, along with that filing date. Have they been in bankruptcy for a long period of time? Have they not been in bankruptcy for a long period of time? Okay. And then here we have last property value and last property value date. So when did they get their last valuation? Again, take this with a grain of salt. This is their number, not your number. And also when it was done, some of these that were done on 1/1/23 or in 2022, properties may have gone significantly up or down since that time. So always do, again, as part of your due diligence, which we'll talk about later, that information. So here's what is on, again, this tape. So I wanted to do a brief walkthrough analysis of what this information means on there. And I'm going to, in another video, share with you another tape. And on that tape is the order of priority of how I like to, organize my tape to easily sort when we're going to start putting numbers to these.